Ladies and gentlemen, welcome to Talking Numbers. It's my special edition of Talking Numbers, the #1 podcast to the accounting industry, which is fantastic as well. So we hope you've been enjoying the past series of Talking Numbers, but this time I've got something new to introduce you to. It's my Talking Numbers Mastering Profit series, and it's brought to you by Profit Master Global Outsourcing. My name is Paul Jantz, and welcome to this podcast series where I'm going to take you through what I'm going to call some thought-provoking discussions and some ideas. It's something that we presented to a CPA group back in July, and it's something that we wanted to expand on through this series. So we weren't limited to probably the 60 firms that attended down at Cape Schanck, but we wanted to expand on sharing the ideas of how you can start to look at growth in particular, and how you can start to look at growth through people, and in particular, probably your people model. And probably we're going to challenge you to think about, from a strategy point of view, how can you start to what we're calling master profit through people? Okay, so over the next 20 or 30 minutes, this is a 5-series podcast series. So you're going to hear a lot of great things. Hopefully you've got the ability, if you're watching this, fantastic. If you're listening to it, you've got the ability to go back, have a look at it, review it. There'll be a number of golden nuggets that you're going to be able to pull out, get your team members involved. Hopefully we can share a little bit about how you can start improving your strategy to improve your profit through people. Now, given my coaching background and accounting experience as well in working with the firms all around the country and certainly parts of the US, the UK, New Zealand, and so on, I'm really looking forward to this because it's going to be an extension, like I mentioned, it's going to be an extension of what we went through at Cape Schanck earlier, probably about 3 or 4 months ago now. And what I've done is I've actually pulled together a nice little guest to take me through this. So in this series, I'll be talking to founder and CEO of Profit Master Global Solutions, Richard Croker. Richard Croker, welcome to Talking Numbers Mastering Profit. How are you?
Paul. Really good, mate, and a pleasure to be here.
Yeah, fantastic, mate. I'm looking forward to getting into this. I think the 5-part series is going to be really important, where we share with our listeners exactly the bits and pieces, and I think in particular that you shared as well at Cape Schanck, where you can obviously share that to a wider audience. And I'm looking forward to that. Mate, before we get into today, and we're going to talk about growth. We're going to talk about growth via people, as I mentioned before. Are you okay to share maybe 30, 60 seconds on yourself? I know you've got a really broad background, which is fantastic. I think it's going to resonate well with the people that are listening to this. You're okay to share a little bit about you?
Well, I've been in the accounting industry for more than 40 years, I guess. I'm a CA. I qualified back in the early 80s. I'm from a family of accountants. My father was an accountant. His father was an accountant before that, and goes back even further. But I was originally with one of the large firms in Sydney in the audit division. Found my way into a company secretarial role in a listed company soon after I qualified. And then found my way to the family accounting practice out in central western New South Wales. I then moved to Queensland, built and sold some practices up here. My wife and I travelled for a while, and I've been in practice now in the current practice that I'm in for about 5 years. And the business, the Profit Through People business, it has been going for about 8 years. So I've been around for a while.
Yeah, brilliant. Mate, you probably mentioned it before just then as well. You've been involved in a number of different businesses. I'm gonna call them a number of different successful businesses and different business models as well. Look, this series is all about growth. It's all about growing through people and obviously increasing profit, which is an important factor. It's always really important to improve the top line, but to me, it's not as important as maybe improving the bottom line with that, because it changes a lot of things when you've got bottom line profit. In your definition, what's your definition of growth?
Well, my definition of growth has to be shareholder value. Talking about business, the top line of a successful entrepreneur is about profitability leading to shareholder value growth. So in the area that I'm in, it's about shareholder growth.
Yeah, good. And look, I'd agree. Certainly through my coaching days as well, there was a number of ways that we used to look at growing an accounting firm. And I always threw that back into the directors and the shareholders, I suppose, to say, well, how do you want this to look? Do we want just top line growth? Do we want bottom line growth? What does that equate to with the way the business model's changed now? Because we moved to a multiple of profit as an example. So there's a number of things in there that was important to have a look at that. But one of the key things that I always spoke to our firms about was everyone wants to grow, but it's about having the capacity to complete work. And therefore you've got to call it a thought process of giving everyone the ability to think about if you can add an extra 200Ks in fees, okay, and this is the one thing that I want to challenge everyone that's listening to this. If you can add an extra 200,000 in fees, and that shouldn't be a lot, okay, can 50% of it drop to the bottom line? Okay, so it's an interesting thought process in any business. If you were to add 200K in fees, yes, you need 200K in, let's say, capacity to actually complete those fees, but can 50% of it drop to the bottom line? So that's something I want all of our listeners to think about, because that's what some of the key things we're going to work through. So Rich, let's call it from a people model perspective, you can, obviously people cost you money. You can obviously, to improve profitability, you can always reduce costs. What are the key things that you have been able to do or focus on when you've been able to grow a business to improve that shareholder value, let's say?
Yeah, look, you make a very good point about if you're going to add a couple of $100,000 in fees to your business, you've got to be able to have the capacity to be able to do the work. And just throwing a labour resource at the business and expecting that it'll be able to work is too simple a part of the equation. It's got to be about utilisation as well. So in order to get maximum utilisation, there becomes a balance between the number of hours that you throw at the project compared to the capacity of those people to do the work. And the capacity of the people to do the work is going to be dependent upon their skill. So that's what I would say. You need to find that balance between the resource itself and the capability of the resource itself to do the work, defined as utilisation. If you can balance that up, you should easily be able to see that drop to your bottom line.
Yeah, I think the key things with all of that as well is that I believe, and certainly in the past, certainly work with firms, so I'm using a little bit of experience this, and probably just to expand on this a little bit more, is that firms automatically look to reduce costs to improve profit. So there's some different ways to do that, and that's probably what we're looking at here to say, well, what are the different ways that you can do that? So let's talk for a second about increasing the top line. What do you think are some key ways that you can increase the top line? So you've run accounting firms, you mentioned that before. What are the key things that you would suggest that people can start looking at to increase the top line?
Yeah, Paul, I think, the two things that are going to improve top line are units sold multiplied by value, dollars. Now, unit is not necessarily a time unit as traditionally we think of it in an accounting practice. It can be a project itself multiplied by value, but there is only two things in the inputs that you have in the top line. One is price and one is quantity. So looking at those two, where do you go? I think that a lot of accounting firms undervalue their time value, so the price. And I think that when they look at it, if they really work through what's being provided and the value that's being provided to their clients, there's good potential perhaps for an increase in price there. But let's say that you're already at maximum price, then it's a matter of increasing the number of units. Now, I mean, that could be anything. It could be increasing the number of of unit sales, for example, in a firm that provides CFO advice every month, and it might just be an amount per year that's being charged to the client. The simple answer then is you need more clients. And then at the same time, if you're working on a time basis, it might be you need more units. You need to sell more units. So it's really horses for courses. But you know, accountants themselves should be working out how they actually go out and find what it is their niche and their product, and then go out and selling more of it. But it still comes back to quantity and value.
Yeah, look, I'd agree 100%. And I think that's where sometimes some firms, and I'll use an example. I spoke to a firm only last week, and they said, "Oh, PJ, have you got 5 minutes that I can tap into your little brain for a second?" I said, "Yeah, absolutely." And we started talking about he wants to grow his firm, although he's confused how to do it. So it's an interesting one that you were saying before, because sometimes you just mentioned that in terms of increase of fee. Now, the key thing to this as well is, and to everyone listening to this, I want you to most people, and I'll say me, I'm a business owner and I've been around for a while, and I've also coached a lot of firms, but also I'm just an individual that we look for value. Okay, so I think people only start to question the fee when there lacks value. Okay, so remember that. Try and look at, if you're looking to increase fees, fantastic. Am I increasing value? And it's not what you believe it is what the client believes it is. You know, we've gone away from obviously big folders and given each other a file at the end of the financial year with our financial. That's not value to anyone. We think the firm thinks it's value, and I'm basing this on what firms have told me in the past, but I'll guarantee you to a business owner, that's not of value. Okay, so we've got to look at that. But I tend to agree with your comments before with regards to making sure that there are ways to increase fees and therefore value as well. Mate, what do you think in terms of, again, and I'm trying to tap into the accountant's head a little bit here, but if you can share just a little bit on, what about a reduction in costs? What do you think, you know, again, sometimes do the firms automatically look at their people and reduce costs, or what are the key things where you could focus on to reduce costs?
Well, when you talk about golden nuggets, Paul, the reduction of cost is just an opportunity, a straight out profit opportunity. And, you know, I'd defy any business to say that they have totally maximized their cost reduction strategies. There is always opportunity to change the level of cost. But in an accounting practice, those opportunities are existing everywhere. And I mean, just to be able to take a short internal audit style review of your costs on a regular basis to have a look at where opportunities lie to reduce cost, you know, the opportunities there are enormous. And it's not just costs like, you know, tea leaves in the kitchen and stuff like that. I mean, it can be big ticket items like interest or rent or things like that, but also staff costs too. Because if I could just come back to the point that I was making, staff efficiency is a very important factor in determining profit. And in my practice, we actually found this during the COVID period, where in the early stages of the work from home period, our efficiency, our productivity looked good on the face of it, but our actual efficiency was really had some issues in there while we were sorting out exactly how the work from home model was going to be able to work. Over time, it improved, but that came from the continual inputs of the people who are involved to work out how we can do it better. And that's what I'm talking. That's what I'm saying. Continually looking at the opportunity to be able to reduce cost. I think a lot of firms spend a lot too much time on the top line, forgetting that the profit can also exist in your gross profit and in your other costs as well.
Yeah, it's an interesting little scenario when firms do get together for their planning and where should they focus their energies. But I totally agree with what you just said there. It's and fairly important. So if we look at that aspect, given your experience in dealing with a number of different firms and the firm, obviously the firms that you run today, what is the cost saving? And I know we're going to get into this in this particular series as well. I'm going to, in particular, if you're listening to this, in a few other episodes, we're going to talk about finders, minders, and grinders. And we're going to break that down to how you can start looking at different resourcing for different areas of the business. So please look into that. I'm not quite sure which episode that is, but it's going to be a part of this series, which is the most important thing. So going back to my question, sorry, given your experience in dealing with this, what's the cost saving to having a team? Obviously, this is Profit Master, global offshoring. A lot of firms have moved offshoring now with teams, whether, they're doesn't matter where they are, but they're not working from the office, as you mentioned before. So what's the cost saving involved?
So the labour cost saving is about half. In pure labour, it's about half. So if you're paying, well, it's actually more than that in a labour cost saving. So if you're paying a staff member 75,000, you should be getting better than 35,000. And if you're paying somebody 90,000, you should be getting it, around the 45,000 mark or better. Also depends on where you're engaged. So the locality makes a difference to that. So for example, our business is in the Philippines. There are other companies that provide services in Vietnam and India. There are reasons why you might go to those places compared to the Philippines, as there are reasons to come to the Philippines. But in our area, if you're paying a senior somewhere between 70 and 90, you should be getting that for half.
Okay, so
or fractionally more.
Touching on what you just said, then, sort of, why do you believe that in terms of the offshoring people? Why would there be differences between, let's say, the Philippines to the other countries that you mentioned?
Well, there's different models for a start. In some of the countries outside, beyond the Philippines, the outsourcing model in accounting might be a project model where a particular project might be handed over and then dealt with by an individual, or handed over to a manager somewhere and then handled by an individual, and then the process comes back through the manager and comes back to the firm here in Australia. Some people prefer that model, whereas the model typically in the Philippines is that it's a full-time model where the accountants will work full-time for the accounting firm on a day-by-day basis, week-by-week basis, and beyond. As an accountant, we certainly looked into that when we first started, and it was clear to us that accounting firms here in Australia, that's certainly within my areas, preferred to have full-time staff rather than project. But I mean, there's other reasons as well. Filipinos have very good English skills, for example. Other things like that.
No, you're very true. So given your, again, you've tried, it's probably a good one to raise in terms of, because when we're talking to people, and this is a model that has been proposed, they've always had, let's say people have tried it and it hasn't worked for them. What would you say if they've tried something and it hasn't worked for them?
It's look, it's like being in business. Sometimes you can try something and it doesn't work, so you have to go and start it all over again. You said I've been through a couple of businesses. I mean, yeah, businesses succeed and businesses fail. Hopefully you have more successes than you have fails. And offshoring is just a project like any other project in a sense. And if it failed, then you need to go back and look at the reasons why it failed, whether it's external to the whole project, or whether it's the issue of the provider, or whether it's something internally in your own firm. The one thing that I would say to it is that look at what was actually being handed over, and then look at the reasons why the specifics of that particular project were not able to be dealt with. It may actually be that you put the wrong person into the role, for example. That's a recruitment issue.
Yep.
Or it could be that there was somebody internally that was unable to supervise the people offshore. Well, that becomes more of an internal issue. I think one of the things that we've learned is that if you want to try outsourcing, you make sure that you've got a champion within the firm who is going to really do everything possible to be able to make it work. So if it's failed, then look at exactly what you had. Why did it fail? And then look to say, well, is it worth reconsidering again? I think one thing COVID has done for us, and also the shortage of talent here in Australia, particularly in the accounting profession, but other financial services related areas as well, the shortage of talent here in Australia has meant that naturally there's a tendency for us to look beyond our borders to be able to try and find the staff. So if it's failed before, don't necessarily write it off. Learn from what happened and then see if we can turn it around, see if you can turn it around to make it work. There's enough evidence around to show that it works very successfully.
Yeah, you're 100% on the money there. And I think that's the great thing about sometimes when, and I don't know about you and sort of maybe our listeners as well, but I'm a big reflector. So I like to reflect on things. And you're right, not everything is going to work. That's life. We're going to make mistakes. We're human. So it's a matter of reflecting on that. So, and exactly what you said then, and it's something to all of our listeners now, it really is something that you could probably take away and start looking at. If it didn't work for you, it's a bit like anything really, even things are going well, you can still look at how do I improve it? So it's no different, reflecting on that and saying, right, what did go wrong for me to make sure I don't make that same mistake again? It's like anything in life, I suppose, very, very much exactly what you just said then. So I think you've got the ability to look at that and break it down. And a lot comes down into, certainly from my experience as well, and Rich, you've worked with a number of different firms as well, and might want to expand on this, and we might get into this in future episodes as well, is my experience also tells me you've got to make sure you're communicating that well to your current team here in Australia if you are going to look at outsourcing elsewhere, because it's important for them to know that they're not being replaced. Really, really important point. So the fact is you're allowing them, you're enabling them to upskill and having more time to give value-added services to clients. There's a lot of different elements there that you can break down. Is that also fair to say?
Very much. As you mentioned that, I'm reminded of a firm that we have in Sydney. I think they've got, excuse me, they've got about 4 staff with us. And they initially started with 1, and then they were looking at pulling back from that because they were not entirely happy with the way the model was being built. And once we got through some of the difficult areas that they were able to, that they were having with the original staff member that they had, I realised that the problems were not insurmountable problems. We were able to go and look at those and remodify the process that we had in place, and then go back to the model itself and try it again. It was over a period of about a year and a little bit that they gradually got comfortable with the whole idea. They now not only have 3 accounting staff with us, they also have a secretarial staff member with them. And they are completely engaged with the firm here in Australia. They join their staff meetings online, and they do their professional development online together. They have relationships through performance reviews with their bosses here in Australia. A couple of them have actually been out to Australia. They actually went back just about a week and a half ago. So it's about how you engage with the team, and it doesn't matter whether you're here in Australia or your team's over there. It doesn't matter. It's how you engage with your people. That's the most important thing.
Correct, and I think it's given, like as you mentioned before, it's given the last 2.5 years or so has given people the opportunity to look at that. Whether you believe the working from home model has worked or not, it's allowed you to experiment, I suppose. And certainly the statistics are showing that it's actually worked really well. And people, I know, on one of our shows, a live show that we did only a few weeks ago, that the statistics were glaringly that things have improved. There is a trust, there is an empowerment. There are all these really key messages to having people work when you're not in the office that can still be productive and actually be more than productive. So those are the sort of things that I think is really, really important as we look forward to this, next layer of how do we continue to, master profit through people. Mate, fantastic talking to you. Look, thank you. I think, to all of you listening, all of this, it is the first episode in our Talking Numbers Mastering Profit series, and this is episode 1 of 5. So Rich Croker, thank you for joining us. Again, knowledge, experience, everything that all of our listeners should be looking to tap into is absolutely priceless. So certainly look forward to chatting to you over the next few episodes. Thanks for joining us and enjoy the rest of your day.
Thanks, Paul. I look forward to it.
Join us at Profit Master. Passionate people, passionate career.